Welcome to the Compass e-learning series. This session will show the options and shortcuts for budgeting and forecasting in the Strategic Business Unit, or SBU, version of Compass. There are two ways to forecast in SBU versions of Compass. Top-down, that's starting at the top level and pushing down to the branches and departments, or bottom-up, starting at the branch or department and then rolling up to the total. Let's start with top-down. Verify that the SBU or Consolidated Plan is active. The easiest way to do that is to check the current plan path in the lower left corner of the screen to verify that the SBU file is loaded. Next, click the Projections button. Inputting balance changes in the SBU plan is supported only at the account level, not at the folder level. If your institution has a very large number of accounts and a smaller number of branches and departments, you might find it easier to plan at the unit level where you can make changes at both the category and account level. But if you have a large number of branches or departments, or if you can limit adjustments to just a few categories, you can really save a lot of time by using account level editing in the SBU plan. Here's how. Click the category name that you want to change. For example, let's say that we're ready to work on loan projections. So we'll click the first count in loans, which is Commercial Loans Fixed. Use the Initial View tab, Projections, to see all the balance, cash flow, pricing, and income history and the existing projections in the account. Deciding upon future projections can be challenging, but it's easier when people use a familiar method. Some people tend to think in terms of percentages, but others are more comfortable with a specific dollar amount of growth by month, quarter, or year, and then others like to set a simple target to reach by the end of the planning period or year. Compass has tools to support each of these methods, and we'll show you how easy it is to input each method. Let's start with percentage change. For example, let's say management wants a 10% growth in this type of loan next year. Click the Department View to activate it. That'd take a while to calculate and enter all of these revisions in each branch, but fortunately Compass can automatically adjust every branch in the system when you change the amount in the total column. Notice that most of the branch columns start with a button labeled Modeled. That means that a growth model for automatic reforecasting is currently active. Growth models block manual entry, but we can disable all the growth models on this account just by clicking the Modeled button in the Total column. Then we click Yes when asked if we want to disable all the models. Next, we'll click and drag in the Total column in the rows starting December 19 through December 2020. Then right-click in the highlighted range. Click Quick Edit. Since we've decided upon a percentage goal, click Annual Growth Rate. Then enter 10, the percentage that we wanted, in the Annual Growth Rate box and click the OK button. When we return to the projection view or move to another function, Compass will automatically apply our changes to each and every branch and recalculate all the totals. A word of caution, however, these changes are saved into each branch's database, so there's no really easy way to restore to a prior projection unless you have a backup that includes all of these individual units. That said, let's move down to another account, Commercial Real Estate Fixed. I'll click it to open it. Now this time, management wants to show a significant decline in balances because of market conditions. They believe that there'll be a 24% drop in these balances during 2020. So we'll click the Department View. We'll highlight December 19 through December 2020 in the right column. We'll right-click and we'll choose Quick Edit. Again, we'll select Annual Growth Rate, but this time we'll enter a -24 in the Annual Growth Rate box. We'll click the OK button. And notice this action reduced the December 2020 balance to about $106 million. But when we go back to the Projections tab and check the December 2020 balance, well, wait a minute. The December 2020 balance shows $118 million. That's not the full 24% drop that we processed before. So here's another caution. When an account has maturity data, balance declines will be limited to the total maturities in each month. Further, this limit is applied at each branch so that declines at the SBU level might be even less than the maturities shown in the consolidated view because of limits at some of the branches where they don't have a lot of maturities coming off. This rule is logical, and it prevents income calculation problems when you mix existing and new balance rates. If management insists on higher balance drops, you can still do that by increasing the prepayments or accelerating the maturity distribution in the branches that show zero in some of the new balance months. Well, let's move on to an example of dollar growth per month. Our sample bank has seen recent strong demand for construction loans. So we'll look at construction loans -fixed. If we highlight the EOM balances between January and May of this year, we can right-click and see the total, average, and trend for those months. The trend is the average dollar growth, and it's just under $1 million per month. And management feels that $1 million a month is a reasonable estimate for future growth too in this account, and they want to extend that through the remainder of this year and all of next year. We can revise our projection by again clicking the Department View tab. We'll highlight the balances from June 2019 through December 2020. We'll right-click in the highlighted area, and then we'll make 2 sequential edits to get this change. First, we'll choose Constant and enter the amount from last month in the actual results. That's the May 2019 amount. That amount is $12,073, so we'll put that in the box and click OK. It's necessary to put that base in. So we right-click the highlighted area again and select Quick Edit, and this time we'll choose Aggregating Offset. Aggregating Offset adds or subtracts the amount times the number of months from the start of the highlight. So if we enter 1,000, which is actually $1 million because the balance sheet encompasses in thousands of dollars, we'll get an increase of $1 million the first month, $2 million the second, $3 million the third, and so on. That's exactly what we want. Wow, look at that. We end up with a growth to over $31 million by the end of next year. Well, let's move on down to the Now accounts for another example. Remember, we need the Now account, not the folder, to edit at the SBU level. Here, management states that they just want to reach $24 million by the end of next year. Now, the current EOM balance projection is only $23,108,000, so it's a little bit short in December 2020. As before, we can make a simple change by activating the Department View tab. We notice again here that the top of the total column shows models, so first we need to click that button to turn off the models at the branch level. Then we can highlight June 2019 through December 2020 in the total column. We can right-click in the highlighted area and select Quick Edit. This time we choose Ramp to Value. We enter 24,000, which of course is 24 million, and we click OK. Before we move on to projecting at the branch level, let's review some examples of changing non-interest income or expense at the SBU level. We'll select life insurance. It's in the employee folder in non-interest expense. We've just learned that our insurer is raising rates by 12% in 2020. We'll go to the Department View tab and we'll highlight the 2020 months in the total column. We'll right-click and select Quick Edit. We could choose Annual Growth Rate, but that will give us a gradual change that will reach 12% by the end of the year. But insurance is billed annually, so what we want is the same amount in each month next year. Do that by selecting Offset, then multiply the monthly amount times the percentage we need and enter that dollar amount. In this case, that's $2,499 times 0.12, or an increase of $300 per month. You can also use the Department View area to make changes in a single branch or by an individual branch. This is really useful if you have non-interest income and expense accounts that are budgeted or allocated to the individual branches by the head office. This way, the person posting those changes doesn't need to go to the trouble of visiting each branch individually. Let's show you a trick for doing this. We'll move down to an account in the Occupancy folder called Heat, Light, Power, and Water and open the Department View. Then we'll use the Alt plus the Tab key to switch to a spreadsheet showing the 2020 monthly budget for heat, light, power, and water by branch. Well, it looks like a lot of typing here. and a lot of chance for error if you type like I do. But the good news is you don't actually have to type a thing. You just highlight the monthly amounts for each branch in the spreadsheet, and we'll start with the East branch. And we'll click Control-C to copy that. We'll use Alt-Tab to get back to Compass. We'll click on January 2020. No need to highlight the entire column or even the section of column, just what's called the anchor cell or the first cell in the range. Make sure we're in the East branch, of course, and then we click Control-V and we'll paste the portion of the column or that 1 year that we copied from the spreadsheet. Then we'll repeat that process for the remaining branches. There's no need to copy the total column. The total will automatically re-add as we're making the changes in each branch. There are 2 notes about the pasting data process in Compass you need to be aware of. One of them is that because Compass columns work a little differently than the spreadsheet columns, you must copy and paste each column separate. You can't actually post more than 1 column at a time. And secondly, if you right-click in Compass, the paste option might be grayed out or not available. So that's why we use the Control-V key combination instead of the paste option from the on-demand menu. There are a lot of other ways to copy and paste data to and from Compass. Give PlanSmith a call if you have questions about that. But it's time to move on to the other way of branch forecasting, working from an individual branch rather than in the consolidated plan. It is possible to load a single branch or unit immediately when you open Compass, but it's handy to open these plans by using the consolidation button. That's the one with the organizational chart in the navigational toolbar. When you load an individual unit, you can no longer work on more than 1 unit at a time, but it's pretty easy to move from one unit to the other. Just be sure to click Yes in the box that appears when you exit a branch that you've been working on. Otherwise, your changes will not be saved. Now, that's good if you're just playing around and you really don't want to save the changes. One other detail, your changes may not appear in the SBU plan until you click the Compute button. But you don't have to click Compute every time you make a change. You can wait until you finish all the work in a session or additional branches if you want to. It's up to you. Single units allow editing at both the category and the account level. So doing broad projections by major categories, followed by fine-tuning the accounts that don't fit the pattern, that's a great time saver. Let's say that we have a meeting with the manager of our South branch to discuss her budget. We'll start by double-clicking the South branch on the consolidation or the strategic business unit screen. Compass then will load the plan for just that branch. We can check the path at the bottom of the left-hand corner and notice that it does show the branch name and no longer any notation of SBU. So any changes we make here will only impact the consolidated plan if we save those changes when we exit the branch plan. The first thing we'll do is click Projections, then Accounts on the menu, or we can just click the Projections button on the navigational toolbar. And we'll start at the highest level, Total Assets. Just click Assets. In Compass, when you double-click on column headings, you'll often get a graph. For example, click on the EOM balance column and we can see the historic growth of the branch, the current projection, and the budgeted growth in the most recent budget lock. It looks like our current projection is lower than both our history and last year's budget. We can click the Change button and we can reforecast everything in the asset category all at once. Compass supports 2 different ways of projecting by categories, a single annual percentage or annual percentages by month. If you use the annual percentages by month, you'll put the annual rate in each month and it will be divided by 12 to give a monthly growth rate. That happens automatically. A single growth rate is called a quick model, and an array of monthly annual rates is called a new model. New models are great for categories with a lot of seasonality, or when growth rates are expected to change significantly over the term of the projection that you're working on. Once you create a new model, you can give it a name, save it, and then it's added to a library of named models that you can use anywhere for this branch. And when you click OK, the model will be applied to all of the accounts in the category you're working from. Note that applying either type of these models will change all the projected balances for all the subcategories or accounts. So you don't want to do that if you want to retain certain details. You can only recover prior projections by closing the branch plan and choosing no when asked about saving, and then reopening the branch plan again. There are two popular choices for the initial growth rate for a big category like assets. One's called zero-based budgeting. For that, you input a growth rate of 0. This will just carry forward the last actual month-end balance through the remainder of all the 5 years in the total projections in Compass. Another method is to use a percentage. This is what you actually expect for the overall asset growth to kind of give you a base of growth that you can modify in the more detailed categories. In this case, we expect assets to grow at about 15% per year. So we use this 15% estimate. Since we don't feel the need for seasonal or monthly changes in the growth rate, we can just use the quick model and we'll enter that 15 and click OK. Now we only have to adjust asset categories and accounts that have different growth rates than 15%. Materially different. That means that we don't have to worry if it's off a few bucks, but if there's going to be significant dollar differences, then we need to visit those subcategories and adjust those to what we really think is going to happen. It's prudent to look a little bit more closely at your major accounts, especially where errors in the growth rate could have a big impact on overall bank performance. For example, the branch manager knows that commercial real estate fixed loans account for over half of the branch's total assets. So we want to make sure that that growth position is attainable there. We'll click on commercial real estate loans. Then we'll double-click EOM balance to look at the growth comparisons. What I see here is that the 15% growth assumption is consistent with the long-term trend as well as last year's budget. But lately, balances have been shrinking, not growing. I'm a little worried about that. So we need to know if this recent trend or decline in balances can be reversed and we can get back to the 15% growth. We might want to look also at the new balance column. This shows the amount of new or renewed loans that are required each month to get the growth to reach our goal. And that means that we've got to not only create those loans for new activity, but we've got to replace the principal payments and maturities that are happening that month. The question we want to ask, is there enough in our current loan pipeline to generate the amount we see in this new loan column? If not, we better revise the projection and look for another way to make up this loan volume in another category. So there are a lot of ways to make adjustments in projections at the account level. There are two other e-learning series videos that give you examples. One's called Forecasting Overview, and then there's a much more detailed tutorial called Just Forecasting. So we'll skip the actual editing in this and we'll concentrate on some other things to consider, especially in SBU versions or branch versions of Compass. Be sure that you review all your major categories and accounts. Once you've had some experience in this, the process can take as little as just a few seconds. One other note, there's no need to look at Fed funds sold or funds pool out because these items are calculated by Compass to balance each branch or unit. Once we're satisfied with the asset projections, it's time to look at liabilities. You could begin with an overall growth rate for liabilities, but personally I find that branches often have very different growth expectations for different types of deposits as well as non-deposit funding if there is any at the branch level. So you might want to just establish different growth models or account level edits for the most significant accounts and categories. Remember, no need to edit the funds pool or, for that matter, any of the capital accounts. That's all automatic at the branch level. Finally, it's time to look at non-interest income and expense. The culture of your organization will have a major impact on the process of forecasting this area. Some institutions budget in extreme detail for expenses, while others are satisfied with very general assumptions. Some institutions centralize the budgeting for some or all of the branch income or expense items, and others insist on branch management input. Regardless of the culture, the more communication and participation in the budget and planning process, the better. Knowing the Compass tools for projections allows you to update the system almost instantly at either the summary or detailed level, and not only that, but to understand the impact of these changes. So consider the use of advanced modeling, like new month from previous month, to minimize manual entry without sacrificing detail. And don't spend valuable time looking for ways to do things in Compass. Just give PlanSmith support a call. Thanks for taking the time to review this session and for being a PlanSmith client.